What's good, YouTube? It's your boy Michael. Welcome back to MC9J. Yeah, it's your boy again. It's been long I did like a facial video, but also a lot of people enjoyed my last week breakdown where I took $100 to $200. Guess what? We did it again. Some people think the first time it was luck, but we showed them again that it is not luck, and it's not actually flipping because don't worry, when I show you the breakdown right now, you're gonna see that it's what we call sniper entry from like 4 hour time frame and like the old Dana bots. You understand? So it's like a trade whereby you enter at 1 and the trade ran to like 100% or something like that. So even though you put small money as a risk, you can generate a lot of money from it. So I'm gonna be showing you guys a breakdown of the video of the week charts, everything, and I hope you enjoy it the same way you guys enjoyed the last week one. So we have done it back to back twice now. Like, let's go to the charts. What's up guys, so today we're gonna do another breakdown of my week. And if you look at it if you're looking at the screen right now, you can see demand zone, another demand zone. I'm cooking for next week. Like, you can see it's consistent. Let me show you guys. So some of you were asking where to learn ICT concept. Just go to our YouTube video, ICT 2022 model. The videos are 42 and you can learn everything from. So I'm going to be showing you, just the same way I did last week, my own personal trades and the trades that maybe I didn't see during the week. Understand? So as I said, we are on the 1 minute time frame, and I told you last week that the 1 minute time frame on gold is like the 15-minute time frame. Trust me guys, it's like the 15-minute time frame. The moves are crazy, the moves are different, and the rest of all. So I'll just be breaking down, back testing the week, and the trades that I took personally, I'll point them out for you guys. So where is Monday? Yeah, this is Monday. So on Monday, I didn't take any trade personally. And now let me show you, if we're to trade on Monday, how we'll have executed. Now last week ended very bullish. So on Monday morning, this was the Asian session. This box here was the Asian session. Asian session ended. Then we had like a kind of a mini sweep, but it's not a confirmation sweep of liquidity. Like I told you guys, I trade intersection liquidity. ICT taught us his model, and yes, I think he also used intersection liquidity, but he has different type of liquidity. There's intersection liquidity. There is 4 hour liquidity, 1 hour liquidity. When I mean intersection liquidity, it means I'm waiting for liquidity to be taken from one session high or low, and I'm waiting for my market structure shifts to show me a direction where price want to go to. Now let me break that English down. Now this is the Asian session. Now you can see that when London opened, we had a sweep here of the Asian low. Understand? We had a sweep of the Asian low. Look at it here guys. We had a sweep for the Asian low. After we had this sweep, we had a pullback. You feel me guys? We had a pullback, then we had a down where like kind of a bit consolidation. Then immediately we had a market structure shift. You can see this impulsive candle. You can see that guys. You can see that impulsive candle. You can see this impulsive candle. Boom. Immediately you see this impulsive candle after liquidity sweep, pullback of reaction, consolidated rewind, then we had market structure shift to the downside. Immediately you see this next candle pulling up, you enter for a sell, and that's how it went. You enter for a sell, and if you enter for a sell, put your stop loss at the previous high. Right now this is 4.1, that means we have 41 pips, and if you're using 0.01, that means you'll be risking $4. Now the trade was like 1 to 2 hours. Understand? So that is a simple 1 to 2 hour. Like one thing I love about gold, and you guys are gonna see it from next week, even though the long term trend is maybe bullish, you can have short term sales, or the long term trend is bearish, you can have short term buy or sell signals. Understand, in the market. Now, so you can see 1 to 2 hour, you reach your $4, you earn $8 ASAP. Now on this level, now you can see when price got to this place, you can see that price reacted aggressively to the upside. If you go on the 1 hour time frame, I don't want to be switching from one time frame to another time frame because I'm using trading view. I'm not subscribed, because it will be messy. I'll not be going backwards and backwards. You will see that there was a demand zone on this floor here, a demand zone. Understand? So when price hits that demand zone, when price sold into that demand zone, you can see this was you have tapped into another level of liquidity. This was the last high. Liquidity sweep, market structure shift. You can see the candle closed above. Immediately you see this candle closed above this last high, you enter for a buy immediately, ASAP. ASAP. Immediately put your stop loss at the low here. Monday had a lot of opportunity. Same thing, we are reaching at 4.4. That's 44 pips. 0.01. That is like roughly $5 risk. And the trade round was to 1 to 3. The trade round like 1 to 3 hour. That means you turn your $5 to $15. That's how sweet trading is. Like trading is so sweet. Trading is so sweet like that. So on this area here, on this sell is not it's not a real sell. Now that was how Monday did during the London era. During Asian time, you can see there was a there was a liquidity sweep. There was a liquidity sweep of the London low. You understand? We had market structure shift of the last lower high. Immediately we see this engulfed candle, we enter. After we enter, price went to 1 to almost 2 hours. But that day was a selling day. That's why trade management is very important. That trade went 1 to 2 hours. Understand? Then it later dumped to the downside. Now it dumped to the downside and ended Monday. Now that Monday evening, ending on Monday, price fell into this place. If you can check it on the 4 hour time frame, it was a fair value gap there on the 4 hour time frame. Understand? Price fell into there and price started cooking. There was consolidation. Anytime you see market consolidating, that means price is cooking. If it fell there during the trading session, maybe London open or New York open, price will show entry to buy immediately. But it was already late hour, so price was just cooking. Now when Asian session started, you can see Asian session started. What did he go and do? Swept all the lows that was cooking, all the consolidation lows that was cooking throughout the late hours. Swept everything, pulled back. Understand? Pulled back. When I woke up and I saw this, I'm like, wow. Pulled back. But you can see this was the last lower high. There was no market structure shift. It pulled down again. Then, if you look here again, we have a break above all those highs. Immediately you see that break, you enter. I entered this trade. This is one of my first trade. Enter this trade, and you can see how price beautifully bought throughout. Understand? Beautifully bought throughout. Now there was a re-entry during London session. How will I do the re-entry? You can see that London session swept the Asian high. We have a liquidity sweep. Then we had a pullback. Are you seeing me? We had a pullback. Then what did we see next? We had candles trying to break the high, but the candles were not clean. Understand? We pull back down again, went up again. I think I entered here. I entered here, I got stopped out because it was a fake out. You understand? Then and I checked the time. You can see the time now is showing like 8:07. Now the best time to trade London session for gold is 8 a.m. London session, because this is my trading view right now is in Nigerian time, which is 8 a.m. means in London time, which is 7 a.m. Understand? Sometimes the trades can go, but the most times, 90% of the time, is around 8 a.m. open. So most times now, even though I see a entry during 7 a.m. London open, I will not maybe risk so well. Understand? I'll be very, very vigilant to manage the trade. Understand? But you can see now when it was around 9:15 now, which is already 8 something in London, we had a proper market structure shift. Understand? When we had a proper market structure shift, we entered stop loss here, and we continued another second entry. This is 1.2, roughly 2 pips, 20 pips. If you use 0.01, that will give you only $2 risk, and the trade went 1 to 7 hours. Understand? Remember here, I'm on a trade here risking $4. $4 going to 1 to 8 hours. 4 times 8. Calculate that. Then you now enter another trade here. 2 times 7. Calculate that. Understand? All 18 TPs. Tell me that you already turned your $10 to like almost $60. This is just what they want. Some people saw my screenshot on my community post and they were like, no, I used them because it was reading $10, then you see the profit of $200K. I've already withdrawn, like, and I've already taken some trades in the day and I've withdrawn profit. This was my first trade and I've withdrawn the profit. If you want more evidence, DM me, I can send you the screenshots. In the community post, you can only post like five screenshots. So I cannot post everything like that. So that's how Tuesday went. Now on Wednesday, you can see we had another fair value gap on the 1 hour time frame. All these gap here, if you check the 1 hour time frame, there's a fair value gap at the 1 hour time frame. So all these trades are not trades, except when it comes to this one here. We have what? Asian high taking. We had Asian high taking. Let's open our candle well. See, Asian high was taking. When Asian high was taking, we had a breakdown, then pull up, then we had a market structure shift, like liquidity sweep, broke the last low, pull up into the fair value gap. This way I will have entered, but I was on a bullish mindset, so I wanted a good confirmation. We now broke down to the downside again. That's when I entered, sniped it, short time 1 to 3 hours. This one stop loss is $2. Let's start 0.01, $2, turn your $2 to $6 ASAP immediately. Understand? Are you guys seeing all these trades? So this one, any zone that there was not like original liquidity sweep, don't take them. Sometimes I see trades whereby it's going, but I would love to take them. All those on, they are not high probability. The high probability one are the ones that have taken liquidity of session or hit another block in a higher time frame, 4 hours or 1 hour. Just like this one now during the New York session, it came down, hit a fair value gap. You can see immediately it hit the fair value gap. There was a rejection, then this block here. Then I was just waiting to see. Before you know it, we opened very well. This was the last lower high. You can see that we closed bullish above it. Immediately we closed bullish, I entered on this pullback. You can see that. You can see 4.5%, 4.5. That is, let's say, that's 50 pips. That is, if you use 0.01, you're risking what, $5, and the trade ran. I think I came out 1 to 5 out, but you can see that trade alone. If you entered that trade alone, yeah, this is when I did another flip. I think I didn't flip. but I entered 5, then I withdrew $50 on this day. Understand? I withdrew $50 on this day. DM me for screenshot proofs. I don't have time for cho. So, but this day, it's because I needed the money. That's why I pull out. If I didn't pull out, because this entry ran all the way, to like, because it was that buy that ran all the way to like Thursday. This is Thursday trade. I'm still coming to Thursday trade. It ran all the way, but I came out like around 1 to 5. Now on Thursday, same thing, nothing crazy. I was on a bullish mindset. You can see I was a bullish mindset. Liquidity sweep. Now let me show you something now. For some of you that will just be waiting for liquidity sweep and you will immediately want to tap into. Now you can see that when we took the Asian low, pulled back, this was the last lower high. You can see that we now have any market structure shift. Market price started consolidating to the downside, even broke itself to the downside. So what am I trying to say? After there's liquidity sweep, some people's strategy are like that. After liquidity sweep, they buy immediately. But most times you'll be stopped out. Understand? So you have to have a proper structure. So when it was around, you can see that timing again. When it was around, we had liquidity sweep for a long time, but when it was around 9, understand? When it was around 9 opening, which is 8 a.m. London session, that is when the move started. So it had been consolidating to the downside after liquidity sweep. But when it got here, after I saw this move, pull back, then I saw this 2 move to the upside, breaking this last lower high, entered, and see, around that 9, price started to buy. So 9 in Nigerian time, in London is 8 a.m. and that's the best time gold moves. Understand? So always wait for that. Then for Asian session, always wait for 8 a.m. 8 a.m. which is around 1 a.m. 2 a.m. in the midnight. Then for New York time, I'm about to show you New York time also too. New York time, the best time gold moves during New York time is around 9 a.m. New York Open. 9 a.m. New York Open is actually 2 p.m. in Nigeria. Now the trade went like 1 to 5 hours, then started consolidating. Then I went to the 1 hour, saw this first big one was the first big 1 hour fair value gap. Then I went to the 15 minutes and drew a tiny fair value gap inside it again. Understand? And even though you look from, okay, you can't really see it from here, but if you go to the 5 minutes, you will see anytime you see an order block, then a fair value gap below. It's very, I think, let me show you for the sake of this one. Let me show you. Let's go to the 5 minutes. Anytime you see, look at it here. Anytime you see a fair value gap, you can see the fair value gap from here to this level. Then you can see that order block. You can see that it was when the sniper entry pushed down into the fair value gap, tapping into the order block. Anytime you see something like that, and if you go to the 1 hour time frame, you see that that was the original fair value gap. Let's see. If you go to the 1 hour time frame, let's go to the 1 hour time frame. Now you can see it. This is the trade. You can see the 1 hour time frame. Here's the fair value gap. Understand? You see fair value gap, then you see an order block. Very, very powerful. Very powerful entry. You see fair value gap, just like the one I'm anticipating that will happen on Monday. The one I'm anticipating that will happen on Monday now. The one I'm anticipating that will happen on Monday, you can see the order block, and you can see fair value gap. All those kind of entry are very sweet. Trust me, guys, they're very sweet. So let's go back to the 1 minute time frame. I've showed you something very powerful. You can go and backtest this. Anytime you see order block and fair value gap together, is a very sweet potential setup. Understand? The very sweet potential setup. Now, on that day, you can see that I think it was a CPI. Yeah, it was CPI. when the CPI released, yes, it was bearish USD. Price did as if you wanted to buy at first, then price came back into that zone that I marked, and immediately it tapped in. I pressed my 0.1 twice. Tata. You can see that was a trade that ran 1 to 20 hour. I'm not kidding. It ran like 1 to 25 hour, but I came out 1 to 20 hour. It ran all the way. You can see very snap. You go to my community post, you see it exactly the way it is, like this way. I immediately sniped in like that, because people, what he did here was like, people said USD is bearish, everybody is pressing the buy, putting their stop loss below. So what price did was, it went and collected all the dumb money, understand, sucked everybody out of the their buy trades, tapping into an higher time frame liquidity and zoom. So that's the kind of entry I'm entering now. This kind of trade is trades that you can move $100 to $1,000 or $1,000 to $10,000, just the same way I moved it from $10 to $200. You understand me? So this kind of trades, I'm looking forward to it. Like anytime I see 1 hour fair value gap and I see another block below or above, anyhow it is, then if you go to 5 minutes or 15 minutes, you now see that it's more unique, beautiful. Always look for those kind of setups, understand, because those setups are what we call long-term setups, understand. Like round like crazy, I was screaming. So on Friday we had a buy. This was the buy that brought us into the 3,000 level before we now had a pullback. I actually missed it. I didn't trade it because I was already still swinging, because I was still swinging on Thursday's trade, understand. But you understand. So but actually I already marked that 1 hour fair value, gap below. I was thinking price is gonna come close to it. At the ending of New York session, it came very close to it, but it didn't touch it. So this is gonna be a Monday setup. But let me show you what happened on Friday. On Friday, very unique. We had a liquidity sweep of the Asian low during London hour. Liquidity sweep. We check now. After liquidity sweep, what did I always tell you guys? We have to look for market structure shift. This was the last low high. You can see market broke it and closed above. Immediately it pulled back, enter with how many pips stop loss? How many pips stop loss? 330 pips, which is 0.01. That is directing $3, and the trade went towards 1 to 7. That is 7 times 3. Understand? You can see how gold is milking good money. That was the trade that sent us to the 3,000 level. You can see when it hit 3,005, that's when we now had a pullback. Understand? I didn't see this pullback. I still thought that New York is gonna come and push it more, but it is what it is. Understand? And so that's everything. That's everything. Beautiful trade on Friday, London's time. Beautiful trade during New York time after CPI. Beautiful, beautiful, beautiful. So that's how I was able to move my accounts. So this new week is gonna be different because I've gotten another prop firm. I think I'm making record in this industry. For my YouTubers right now, you guys will think that I'm on my last prop firm was 22 prop firm. Let me break it down to you guys. I've actually blown like 3 more extra in the secret when I was learning how to trade gold February. so we have moved the prop firm count to 25, but I just got my 26th prop firm. And this new week, not only am I going to be trading with $10 accounts again, I'm going to be trading with prop firm. Understand? Since because when I started learning how to trade, I'm just trading good for like a month and 2 weeks now. I was learning to use trendline, but it didn't work for me. But it's not say trendline doesn't work, but my head did not carry it, and I went back to using my ICT concept that I'll be trading using it on currency pair, and on gold is just killing it. It's just killing it, and you guys are seeing the results. So that's that on that, guys. Till next week, we're gonna show you guys my prop firm and everything. So till then, peace.